Hey everybody, thank you for just supporting and checking out YBI's channel. To let you guys know that the website is live. We're also on Google Podcasts, Apple Podcasts, and Spotify. Make sure you tune in and like, subscribe, and hit the notification bell for everything we got going on. We got giveaways, we got good information. And like I said, hit us up. We're always down to talk to you all and figure out what you guys want to know more about. But we can do more for you all. Thank you guys and peace. Enjoy the video. Hey everybody, welcome back to YBI. We got Roman and Zion here, where we talk about opinions and strategies to grow your financial self and financial worth. And we got some good things lined up for you today. On our roster, we got some sterling statements, pet facts. We're going over a little intro to taxes, tax withholdings. Do I need to file taxes? And some more good things all in there. And we'll be back right after this.
We are back. We are back. We are back. If you guys did not know that the tax date to file and get all that stuff done is coming up this week, it is the 15th. What is that? Wednesday? Wednesday. So tomorrow is the day where you have to have your taxes filed. Yeah, get your taxes filed if you haven't done so already. But we wanted to make sure we came and gave you guys some information, what taxes are, what that really looks like, how the process works, all that good stuff. So today, we're going to go over some of the surface level stuff, and then Thursday we'll be back with a certified CPA, let her discuss everything that goes into taxes, everything that you guys really need to know to make sure that you're doing things correctly. Because as Roman said last time, if you're getting a huge tax return, that means that you probably didn't do your taxes correctly. So we just want to kind of eliminate some of the errors that we might have created, and hopefully help you guys get some more knowledge on what it is that you need to do come tax time. So without further ado, Roman, let me get a definition for taxes.
All right. So taxes is a compulsory contribution to your state or federal governments levied by the government on workers' income and business profits, or added to the cost of some goods, services, and transactions. Bam.
Easy, easy. Pretty much, taxes are money that is taken from you, your hard-earned money. It's taken from you and it's given to the government or to your state and the local legislature to make sure that things are paid for. So things that are paid with taxes, schools are funded by taxes, the police force, the fire departments, things like that are all funded by taxes. And then like when you're purchasing any item and it's got tax, that's a state tax. So that tax goes to road construction, it goes to the prison system, it goes to a bunch of different things. Taxes are not something that you can avoid. You can ask, like Wesley Snipes or anybody else that has been cited for tax fraud or anything like that. These are non-optional things that you have to pay. So when it comes to taxes, is really key to making sure that you are doing it and you're doing it correctly. So what we wanted to first and foremost do is get a quiz up here so you guys are able to see if you actually do need to file taxes. If you're making even $1,000 a year, you need to file taxes. Let's just make that clear. So Roman, you have the irs.gov screen up.
Yep.
So we can go over that slightly.
Definitely.
So what's pulling up here is the IRS tax portal. So this is the IRS's website, and pretty much this is a quick and easy way to realize if you need to file taxes or not. So if you scroll down, this is the interactive tax assistant on the government's website, and you can just begin that test. Throughout this test, we took it. I mean, obviously I need to file taxes, and it says, what is the tax year that you're talking about? So we are talking about filing taxes for 2019. So we'll go through that, and then what's your marital status? So we are both unmarried, or he might be married. I don't know.
Whatever.
You got married in the last couple of days? Okay. Single, unmarried, and then it goes to your filing status. So we're both filing single. Yeah. Are you filing head of house?
Well, so depending on where, if you're head of your household, if you're basically living on your own, you are head of household. If you're paying for more than I believe it's more if you're paying more than 30 or 40% of your own living expenses, you are your head of household. So it just depends on if you're paying your own rent, if you're paying your own cell phone, if you're doing all those things, then you are your head of household. And so, whichever one you fall into, we'll do single for this one.
So we're going to do single, and then Social Security benefits. Did you receive any Social Security benefits
Go
either
yes or
yes or
no,
no.
depending on just if you receive those benefits. If y'all don't know what Social Security is, we will definitely go into that. Railroad retirement, that would just be income basically from like your 401k or IRAs or anything like that. Did you provide more than so it's 50% of your own support in 20? So this would be something to know if whether or not you're head of household or whatever. I'm assuming that a lot of these people, probably paying for your stuff. Birthday.
Mm-hmm.
We're gonna make this old.
You're gonna make it your birthday?
No, I'm gonna do somebody else's, just randomly. Adjusted gross income. So this right here is everyone has a tax bracket for what they fall into, and I'm actually going to show you all here from this. Oh, that's the summon now. Where did it? Oh, there it is. For how much tax you pretty much will almost file based on what you are. So as you see, this how it was accidents. Are you single, married, or filing jointly? In this year, your tax bracket you will fall into be by these rates depending on how much money you made, whether you're single or married, or filing jointly. So most of America is about in this area here. So you're paying about 32 to 35% of your money in taxes. That's a good chunk of money. What is this one for? File married but filing separately as head of household. Still around the same amount of money actually. For those
It,
high,
it really
yeah,
is.
yeah,
Actually, no. The first one was up to 500,000, wasn't it?
yeah. It was up to five
Yeah, it
hundred
was
thousand
up
if
to
you were
500,
single. Yeah, this one's actually a lot less. That's
up
wow.
to 300,000.
Yeah. So what else? That means you actually get more of a tax break there. Yes.
Yeah, but major key is that if you're making that much money, hire a CPA.
Yes.
Easy. Hire a CPA, which we'll get into in just a little bit.
Yeah.
Um,
So we'll
so
say like 100.
yeah,
Actually, no, so far our views average income is probably around 40.
you know, cool. So you get through that, and pretty much it tells you yes, file taxes.
You are
At
required to
the end of
file taxes.
yes, you are required to file taxes. So if you just want to bring us back, it's important for us to file taxes. So that's just a quick and easy way to realize if you need to do so or not. Like we said, like if you're making 30,000, yes, you have to file taxes, absolutely. But it really depends on how you're filing with what we're about to hop into next, which is W-2 versus 1099. So W-2 is an employee. So most people in the world are employees of a company. That just means that you work for somebody else. You work for a big branded company, Walmart, you're an employee. McDonald's, you're an employee. Everything like that. A 1099 is a self-employed individual, which just means that you own your own business. You're technically a business. So Roman and I both work for different companies. So we are W-2 in that regard. But in terms of any money that we make from a YouTube channel or any money that we make from any other endeavors that we're doing individually, that's considered 1099. 1099 is just there's no taxes taken out. You get the entire amount that you're owed, and that's it. Versus if you're working as a W-2 employee, they take all the taxes out for you. So come the end of the year, if you're a W-2 employee, you typically get money back, whereas a 1099 employee typically owes money to the government. Anything you want to add to that?
Oh no, we already hit on the point. If you have a 1099, if you make more than $599, you got to file taxes. If it's even a
Yeah.
simple job, from being like a photographer or a videographer, you did some work for a small studio. If they end up paying you more than $600 and they hit you with that tax form at the end of the year, that means you have to pay taxes on it. So just be careful about that. If you make any type of money, just file your taxes.
But there are definitely some benefits to being self-employed. Some of the benefits include that you can do your taxes a little bit differently. Whereas most people are getting a standard deduction, you can do an itemized deduction based on how much you've actually spent for the company. You can deduct mileage with different apps. They'll track your mileage that you spent for business. They'll track your gas. They'll track all different types of things. So for me, I was self-employed as a coach. So as a coach, I had to purchase different things. I had to purchase meals for athletes sometimes, and I had to buy shoes. I had to buy a uniform. I had to buy these different things. So I kept all of those receipts. I logged all of those, and I did an itemized deduction because it was over a certain amount. So then at the end of the year, there was an amount that I had to pay, right, in taxes. It may have been like, let's say $1,000 that I owed the government in taxes. But then I told the government, well, from that $1,000, I had to spend 500 on getting things for the business to keep the business running. So then the government's like, oh, okay, cool. So if that's true, if that's actually what you did, you spent all of that money, you have your receipts to actually show that you did spend that money, then the government actually lowers the amount that you owe. So rather than spending $1,000 in taxes come the end of the year, I only spent 500. So yes, I did have to pay something, but it was significantly less than if one, the government had taken the money in the first place and tried to give me a little bit of it back, or if I had not done a itemized deduction versus the standard deduction. So that was just a little bit about the differences in doing the W-2 versus the 1099. And understand, it's not something that you can choose. So it's not like you can walk into McDonald's and be like, you know what, I want to be 1099. No, you're a W-2 employee regardless. So it's not something that you do unless you open up your own company, your own business, that type of thing.
Yeah, write-offs and deductions are basically what you hear how like Jeff Bezos can make so much money in 1 year and pay zero taxes on it. Things like that, and we're going to get into these more detail once we have Brittany on the show, but um, retirement income, dividend income, passive income, just asset growth, all those things in some ways can be wrote off or a deduction. There's write-offs and deductions for students for buying your books and things you need to go to classes for teachers. And almost every kind of category in America usually has some way they can get more deductions or write-offs in some way. We just don't know about them, of course, because no one really educates anyone on them or even know where to get the information from. The IRS website is actually very informative, but we're all kind of programmed to kind of hate the IRS and not want to work with the IRS, but they have a job to pretty much handle a lot of the money, and they make it pretty easy to do that. So I think we all need to just maybe not look as bad at IRS, but actually look at other companies who are more or less profiting off of us filing our taxes and the people who can actually help us do it for free.
In addition, using the IRS's system is one, super simple, but two, can really benefit you because, like I said, I had $500 to pay back to the government, which you can pay as a lump sum or you can pay in installments. With COVID coming around, I thought that it was really important for me to keep as much cash on hand as possible. So I didn't necessarily want to spend an additional $500 right now if I didn't have to. I set up a payment plan. It was no APR. So I was like, I can just make payments. And as long as it's paid before that date, which I think it's either 60 days, 90 days, or 120 days. The further you go out, the more interest that they'll add. But if you have a shorter amount of time, then you're able to make smaller payments, but you still don't have to deal with the APR. So that's straight through the IRS's website. But understand that those two things are different. So in terms of state versus federal filing, so you have to file state, but you also have to file federally. So if you're filing for state and you paid your state, but you did not pay federally, those are two different things. You can set payment plans for both of those things. This is all for 1099 employees. W-2 people, you probably won't have to worry about this at all because you're typically going to be getting money back from both the state and the federal government. But for me, because I made a certain amount as a 1099 employee, I owed both the state and federally. So I paid the state one, which was like $60, something like that. I paid that one, but rather than just paying this $500, I was like, let me set up a payment plan. I did that. They gave me 90 days to pay it. And now I just pay it by every week or whatever. Whenever I get paid, I can pay it and make sure that it's paid by a certain day before that 90-day limit, in which case they will start charging you an APR based on the entire principal and not just, interest on the back end. So it can be a very useful tool if you use the IRS's website and if you do it well, you can make it work for you. So use the IRS.
From the W-2 side, like my only W-2 job for the last couple years has been bartending. All my other income has came from just my own freelance gigs and things like that. So being that sense, as being a tip service worker, a lot of times you do end up owing more money to the government just because you ended up getting a lot of your money in cash and not paying tax on it right away. Sometimes like you'll get a paycheck for $0 a lot of the time. But what you end up doing, yes, because they end up because when you're a tip worker in especially right now in Illinois or in Chicago, it's $6.40 an hour. So if I make $1,500 to $2,000 a week in tips, that $6.40 an hour doesn't cover it. So they end up having to check for $0 because the government will take pretty much all that to taxes.
How do they know how many tips you got?
You
You
claim your
logging that or
tips.
something?
Yeah, you have to claim your tips. Don't get me wrong. There's plenty of people who sometimes don't, but yeah, you can claim less of your tips. But then it looks when you do, there's a bad side to that because when you go to like do your tax return or you want to buy a house and you didn't claim all those tips you made, and it says you only made 20 grand that year, you actually made like 50 to 100 grand. You just never claimed none of that money. Then how are they supposed to know that?
It's
So
not
there's
just bad; it's also illegal.
yeah, it's
Like
illegal. That's how you get audited, and yeah, you can go to jail and end up paying a lot more money than what you would have paid just doing your taxes. So you can't end up doing like that. But
so.
with that say, you can still do deductions and like itemized write-offs. Like I log the money I spend on clothes, gas, parking, like all those things I still like put out or write keep to the side, and then I just put that on my tax, and the year ends up balancing that out and helping me out a lot. So there are cases where teachers and everyone else who spends money on that job can usually write it off in some type of way because that's money you're spending for that job or for that company or for that business.
The way that you need to do that is staying on top of all that stuff. Understand that where you're going and what you're doing, is that business related? Are you talking about business? Are you discussing business? Do I have to drive to a certain place? Do I have to pay for gas? Do I have to pay for parking? And keeping those receipts and logging all of that information, having either a spreadsheet or an app, because there are plenty of different apps that can do this for you now. You take a picture of your receipt, it'll log it all for you. And then that's the place where you just go at the end of the year and you file all of that together rather than trying to fumble around with receipts that fade and all these other things. You don't want to have to deal with that, or attempting to find receipts or attempting to find or calculate how much mileage you spent. Don't do any of that. Just use the apps, use the technology that's given to you in order to make sure that you're filing and you're filing accurately. Because nothing's scarier than coming to tax time and then you get audited and you're like, man, I have no idea where any of this information is. I have no idea. Like, that's a scary situation. That's why people hate the IRS, because they can come back and ask you to prove how you made X amount of dollars or how you came up with the figure that you came up with. But keeping track of all of that information and staying on top of that from day one, like the beginning of the year, day one, keeping all that information in separate files. That's what I do. I have different files for different things for different years on my tax return, because when it comes to getting a job, getting a house, getting a loan, getting whatever it is that you want, they might ask for 2 years of tax returns, which means that you have to be able to produce documentation from 2 years ago. From 2018, you need to be able to produce documentation that says this was my tax return from 2 years ago. And it needs to be accurate. It needs to be very accurate. So they have a picture of what you made in 2018, what you made in 2019, and what you're projected to make in 2020. Those are the type of things that you want to be able to keep up and keep track of. But you have to make sure that you're being organized in order to do that.
Yes. And let's get into returns a little bit. So basically how people end up getting a tax return is because it's a return. So when you return something, it's because you didn't want anymore or you overpaid for it or a refund. That's actually what happens when you get a tax return or refund. It's because you actually paid out too many taxes and the government's like, oh, you actually gave us too much money. Here's it back. A lot of times how people end up overpaying that is with just your normal W-2 or I-9. Actually, when you fill that out is you ended up just paying out more tax than you actually just need to, because they want to make sure you pay them all back. But you actually can, when you fill out an I-9, is figure out how much money you should be paying out and pay out just that, so you don't have that. Because imagine if you end up getting a tax return for like $1,200. You could have kept that $1,200 and put that in something else. That could have been car repairs. That could have been medical bills. That could have been investments. It could have been so many things. I've seen some people get a tax return for like $5,000 or more, just especially once they have dependents and everything else. So that's money you definitely could have used right then and there, not at some random point in the year that just kind of got dropped off on you. So once again, I'm gonna take you guys to the IRS website where they have a tax withholding estimator, and you can just do this instantly and kind of be like, oh, okay, so how many taxes should I be filling out? What should I be doing? And you can just go on there, exact same how the other test basically was. It would say, How are you filing? Can a dependent do it? No. Yes. Whatever one. No. Other sources of income and payments received: Social Security, received scholarship, unemployment. See, this is something that a lot of you will be end up doing this year, especially because how many 40% of people in America were unemployed at some point. So definitely have to do that. I ain't blind. No, I'm not blind.
Yeah.
Yeah. Whatever. Oh, Jesus.
Very interactive, I see.
Well, this is going to tell you exactly how much. How
Right.
have you ever received this year? About halfway through the year, so we'll say about like 25 grand. Another 25 grand. My employer would withhold appropriate taxes from this future bonus. So this is something you will actually probably need to pull up your paycheck to kind of guesstimate there. I'm just honestly going to do quick math from this one and say, what did we say? We were 50 grand, so I have 22%. I'm going to pull out a calculator for this.
Oh my God.
What you mean? You need to
do what you do, man.
What you mean?
We're learning together.
Divide by 20. Yeah. That's about 1140 per pay period. 520. So this is going to tell you right here, did you ever contribute to your 401k or retirement plan? We're going to go over those in a later episode, but that's a whole different thing. And we can come back and do this because I do have a 401k that I contribute to, so I can show you all what that looks like differently.
Man, that's going to be a long episode.
Yeah. And then the HSA and the FSA, oh yeah, I can't wait. Oh yeah.
We'll just skip all that for now. We'll come back.
Yeah. Go to the next step. Deductions from, so this here you can enter itemized if you have those, or just take the standard deduction. So for 1099s or for anyone that paid money for their company or business, there you go. So we're not even doing tax credits right now because that can be for foreign tax credits for this and that. So this is actually saying an underpayment, but that's how you go through it. You may have to go in there and tweak some things to actually make sure it's like is exactly what you did. We did quick math on this one. But you basically have to go in there and just say and go and fill it out accurately. If you need help finding out any of the information, you can go right there and use your own paycheck and find those things out. But that way you can kind of see how much money you need to be either owing or how much money you've overpaid. So in that case, with that random person in the world, they actually still owed $1,800 to the government. But a lot of times you all might be like, oh, I'm overpaying them $2,000. And that's how you're getting that tax return or tax refund.
Yeah. So in addition to that system, it'll tell you how to change your W-4s. In addition to that, what I do and what I believe Roman does is on the W-4, it's got extra lines. It lets you do a couple things. Well, my company allows me to sign up for 401k via an additional app, and it asks me what percentage of my check I want to go to 401k. So I add a percentage to the check from a third-party app. But as far as the W-4 itself goes, you put in your withholdings, but then there's another line that says, is there more money that you would like to go somewhere else? For that line, I typically will put $50 to $100, depending on the job, because you don't want to overdraft no accounts or nothing. But you take a certain amount of money and you have that money directly go to your savings account. So before you even see a direct deposit, what's coming out, especially this is for W-2 people, what's coming out is your state, your federal taxes, your Social Security, now my 401k, as well as my Medicare, and then my savings account money. So before I see a dime, everybody else is getting paid. I got paid, the government got paid, the state got paid, Social Security got paid, Medicare got paid. Everybody got paid. Everything that's left is what comes to me. From there, now I have, let's say it was $1,000 check that was coming to me. Now all of a sudden it's $650 that I'm actually seeing from all of the deductions. It's $650. So from there, that's when I'm like, all right, cool. Now let me move a little bit of money and pay myself a little bit on the other side, because I don't just want to have one savings account. So I move a little bit money over there. There's a little bit money over there. Let's say I only move $50 there, right? So now there's $600 left. That $600 is what I use to budget, make sure that all of my bills are getting paid, make sure that the gas, the lights, everything is staying on, make sure the rent is getting paid. And then whatever is left over is what you have to spend for the rest of the 2 weeks until you get paid again. That's kind of how I budget and make sure that everything is getting paid, make sure that I'm getting paid, make sure that I'm saving money, all of that. That's how that works. But I don't want to get $750 and then be like, oh man, now I got 750, but dang, I got to put 100 over there to my savings account. I never even see that money coming. So I never miss it. So I'm not budgeting that money is coming in. Like I never see it. I don't, so it technically doesn't exist to me. In my head, it doesn't exist. And so I go and check that account and I see how much it's growing. So that's a way for you to not have to feel like you're spending money at that point, but you're investing in yourself before you even see it. So just the same way the government's getting paid, the state's getting paid, pay yourself and have money sent directly to your savings account.
Yep, having anything on autosave, because being a bartender, like our company doesn't have like a set 401k, but I set up my own account to where I know about how much I make a month, and I set like 15% of my money that comes in goes straight to my 401k. Another 10% goes to one savings account. Another other 10% so goes to another savings account, and then whatever's kind of left over, I send to either my investment accounts or I keep in checkings. So I just tell people to try to shoot for. I want you all to let us know too about how your savings are going. Most people try to save about 10 to 15% of your money. You always want to be saving it. I honestly try to shoot to save 30 to 50% of my income. I save it and I put it somewhere else, or I put it in something. So the more you try to, I do that because I want to, I told you all earlier in the video, I'm all about FIRE, which is financially independent retirement early. So you have to save more of your money now if you want to retire earlier. And that's just how that process kind of goes. Doesn't mean I just live off rice and beans essentially, but I do make sure like whatever money's coming in, I budget that correctly. I know where it's going. I am pretty frugal. I don't spend money on too many things, but it's how you do. It's how you get it done. And doing tax withholdings, as being in the service industry, your tax withholdings will save you. All my service friends are like, "Oh, I had to pay $1,000 a year in tax. I got to pay $2,000 in taxes." If you had put an extra 500 to $100 from your paychecks to tax withholding, you wouldn't even have to worry about that. You might have even still got some money back. You just have to know how to. They just don't know about it, and that's why we're here to talk to you guys about it and help you guys out.
It is really, really simple to make sure that you don't have to pay anything at the end of the year. The reason why I had to pay was for a health credit. I underestimated how much money I was going to make, and I sent that to the insurance company. So I actually underpaid for my premium for my health tax credit. It was like $30 a month, but then you multiply that by 8, and that was like $800. So it's like if you $30 a month, $30 a month. If you had budgeted differently and you would have spent $30 a month, now you don't have to worry about the 800 on the back end. So it's very, very simple. It's something so simple that you can do to make sure that you don't have to pay anything at the end of the year. I think this is a good place to wrap things up.
For a
You have
pet
anything
fact,
else?
I think we got.
Yeah, wrap things
Yeah.
up for here so
Oh
we
yeah.
can move on to the pet
Yeah.
fact.
No.
Yeah, because we want to make sure that we leave enough information for Brittany to go over, because there is a ton of stuff that we don't know. We're gonna let the certified CPA come in and discuss all that good stuff. But for now, let's get into pet facts.
Pet facts. So we got our tax filing feline Ollie from here in Chi-Town, from Chelsea and Jasper. She's cute. She's adorable. Cute little kitty. But our little tax fact, also pet fact, tax fact. That's a tongue twister.
What
Um,
the what the finance feline? What was it? I
no,
done missed it.
the tax filing feline, the tax
Oh, the filing
tax,
feline.
tax
Okay,
fact cat.
that cool. Let's go. I'm here now. I'm back.
Another tangent for today. So, recently I'm getting like a little more about taxes and auditing. So what happens when you get audited from the IRS? They're basically saying like, you told us you only made 30 grand, but we found out you made 50 grand, so you owe us this much money in taxes. Or in some cases, you said you made 40 grand, but you made 250 grand, and you owe us this much in taxes, whatever. And then basically the IRS comes after you to get that money in any way, type of form that they can. Actually, since the Tax Reform Act of 1998, the IRS lost about 27.5% of its funding. What that meant is they could not really go after the rich as much because it costs a lot more money to investigate the rich for their assets, to track them down, to find them, and to figure out where that money goes. You got to pay people for all this resources and time. But it's a lot easier to tax someone who's making $50,000 a year or less. That's why we've actually seen audits go up on lower incomes and down on higher incomes, just for that reason alone. So we need people to just be more understanding and have more knowledge about their own taxes and about their own finances to where you can stop this from ever happening. It's very easy for you to use the IRS's tools as they are there to figure out how much money you're supposed to pay. Am I paying too much? And then how can I file for free? Because even I, who have used TurboTax for a few years now, have liked them, but have noticed they've been changing. I used to be able to do most of my taxes for free on TurboTax, but now it's like you got to pay for deluxe just to get your retirement income in there. Just to do a 1099, you got to pay for premium and all these different things. Well, the IRS does have a free website where you can go on to file your taxes actually for free, and hiring a CPA will be a great help for a lot of you. So we're going to get into that more next week with Brittany, but had to let you all know that.
Dope. Yeah, we'll discuss with Brittany who actually needs a CPA. For people like Roman and I who work so many jobs, we work W-2, but we also have 1099, and we also have retirement, and there's so many aspects. There's 401k. So factoring in all that stuff is difficult. It can be very difficult, and it can be time consuming. So for me, when I was just working W-2, it's very easy, super easy. Don't ever pay anybody if you're just working W-2.
Just a few clicks. Just a few clicks.
It's
boom, boom,
literally
boom.
so simple. You have one document and you put that in, you put that information in. It's very simple. But if you have 1099 and a W-2 and maybe multiple 1099s and multiple W-2s, and now you're adding in 401k and you're adding in all this other stuff.
We didn't even talk about 1098s, but 1098Ts are usually come from school tuition. So our students out there who got scholarships, grants, who have to pay their tuition, all that stuff comes in there. So that's just another form, especially if you're working and you're going to school, it can get a little more even crazy because you're like, what's a 1098T? What's this 1099 I just got? Okay, now I'm getting this other form. It gets a little bit more complicated for you also, but it's all easy. It's all very simple. Even a 1098T, you just got to fill out the forms and you're good.
Yeah, it's pretty simple for the 1098T. Unless you're also adding in 1099s and W-2s and 401k. That's what if you're working a 1099 and a W-2, you may just want to go pay a CPA. But we will get the official answer from a certified CPA on Thursday. So wrapping up for today, going into Sterling statements. Number one, see where you are tax-wise. Go on the irs.gov, see if you need to file taxes. Most likely you do. But check that out. See the differences in W-2 versus 1099, where you kind of fall in that spectrum. And then making sure that you are staying on top of your taxes with receipts and with all that other good stuff, using the different apps and the technology that you have access to, using those different platforms to your advantage is so important. Making sure that you're liking and subscribing this video. And on top of all of this information, because on Thursday, we will have a giveaway. So if you did not watch the last video and don't know the rules, check the description below this video. It also talks about the rules to apply if you want to be in the giveaway. So I'm telling y'all, one of you guys is going to win free money. Free money. Roman and I have money, and we just like, somebody going to get it. So make sure that you guys are following those rules, getting in on this giveaway, because we're going to do another one. And then we're going to do another one after that. So if you are following these rules, it'll be super easy for you to get in on the next one. And that will be it for today, my guy.
Yep.
At the end of the day,
get those taxes
you always
done.
know, get your taxes done and make sure that you understand that we may be young and we may be broke, but we are always investing. Till next time, guys. Peace.
Hey everybody, thank you for listening to Young Broken Investing. We just want to let you know that these are the opinions of the hosts. They're not meant to be the basis of any security purchases or investments. We're trying to give a little information out there for everybody, and have fun and be safe.